Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gerdes at the end of the big table. It's going to be complicated having people text an acronym. So just go ahead and text the word loan to 623 AZ RECON. That's loan to 623 AZ RECON. There is a reason why, if I can pat ourselves on the back, there's a reason why people use us. And there's a reason why investors who are wanting to build wealth in real estate leverage on our team. And it's because of our strategies, our ability to analyze markets and numbers, and really help people find the right programs and the right properties. But loan programs for investors can be very, very creative. And if you're not working with the right team and you're not really exploring all of your options, you could be doing yourself a disservice. And sometimes investors want to invest and they're told that they can't. But in theory, certain programs allow people to invest that think that they can't, and have had big box banks or less qualified lenders analyzing the numbers. And so, Justin, we periodically talk about DSCR loans, and we're going to get into what they are. And I think it was probably about 6 to 8 months ago was the last time we talked about it, because it was truly a amazing opportunity for would-be investors. But in addition to DSCR loans, there's been some major changes to DSCR loans when it comes down to numbers. So let's get into it. What the heck is a DSCR loan and who is it good for?
Okay, so DSCR stands for Debt Service Credit Ratio. It's a really cool product because it allows the borrowers to qualify based on the performance of a property. So what happens is, based on whatever the appraiser gives for fair market rent, determines what our max allowable payment will be. So recently, it used to be a 1-to-1 ratio. So if your payment came in at $2,500, the rent of the property must be equal to $2,500 or more. Now it's 0.75.
Wow.
So, for example, I just worked this one up this morning. $2,550 is what the rent schedule came in at. The monthly payment would be allowed to be at $3,400. People would be like, well, why the hell would you buy something like that? Well, some people will buy it because they can't qualify for it based on what's on paper for their taxes. Some people may be looking into short-term rentals, which a DSCR will actually allow for. It's one of the only products that we can actually say that it's a short-term rental, and DSCR will allow for us to use 125% of the fair market rent. So that's a big deal. But
when you say fair market rent, they're basing it off of long-term rentals, not short-term
correct.
rentals.
There's no short-term rental calculation yet when it comes to the appraiser's addendum.
When are you going to fix that?
I think we're in the works on that.
When are you going to meet with the feds?
Yeah.
But I think the big thing is, this is not a Fed deal. So this.
That's why it makes sense.
Yeah. This specific product is a fairway product, and it's all in-house underwriting. So it makes it very quick as well.
But I want to kind of get into the difference and why this is so powerful. So typically, if I'm buying a rental property as an investment, I'm going to put 20-25% down, but they're really digging into bank statements and W-2s,
tax
returns,
pay stubs.
And that's where it sometimes it precludes people. This is mostly putting the weight on the rental income, correct?
It's putting it all on the rental income, so it's all property performance. It's credit score, property performance, as long as you have the down payment and reserves to qualify for it. So it's super easy. We just we had one individual had 8 S corps, and and we're talking.
His name is Ryan Gerdes.
Hey, it was wild.
Guilty.
It was a no-brainer. We're talking interest rates that are the same as a standard Fannie Mae investment property. And you don't have to go through all the troubles of it. Now, there's there's different options with DSCRs. So if you want no prepayment penalty, the rates on the more equivalent to an investment property. If you're okay with a 3-year prepayment penalty, it's going to reduce the rate significantly. 5-year, even more. But then you're not going to have that opportunity to refinance. So we're kind of staying away from those prepayment penalties right now. But this product is a product that I'm so excited to use personally because it's just so easy. Also, the product will allow you to have up to 50 finance properties. It will also allow you to have a property held in an LLC. So we can close the loan in the LLC without having to worry about the note getting called. Because with a typical conventional financing, you're technically not allowed to put it in an LLC based on the verbiage in your note. So,
all right, if you'd like some more information on DSCR loans, go ahead and text the word loan to 623 AZ RECON. That's loan to 623 AZ RECON. You know, Ryan, for me, it makes investing in our next property that much easier and that much simpler. But it also brings an opportunity for first-time investors.
Well, and I think that one of the marks that might have been overlooked about what Justin just went over is, going with that $2,550 and the $3,200 payment. The reason why that's important is because they're going to require your 20% down, right? But if the ratios don't work out, then you're going to be required to come up with additional down payment.
Correct.
And so having that gap there, or that widened gap, is going to ensure that chances are you're only going to have to come up with 20% because you're allowed to have that difference there. So I'm excited about that change in it for sure, because we've done a couple of DSCR loans where they came back and said, hey, look, your schedule came back a little bit off. You're going to have to put down 30% now.
And that was probably the average before.
Yeah, which wasn't a deal breaker for us, but if you're brand
we
new,
like cash.
But yeah, we're always
like to leverage.
We're always trying to come up with the least amount of cash as possible, so that it provides runway for other options down the road. Whether because that's how investing works.
Mm-hmm.
Most of the time, it's not like you know what, I think I'm going to go buy an investment property today, and you go out and you find the perfect one. That's not the way that it works. You're generally pounding the pavement, or you're throwing a number of different offers out there that get declined, or the seller's not willing to sell it for that much, or whatever. So when you do find those deals, they don't happen on command. Right?
So let me tell you this, because you had a good point there. You said something about new investors or experienced investors. So the 0.75 ratio is only for experienced investors. So they have to have at least 12 months experience shown on tax returns.
Oh, okay.
1-to-1
that
ratio.
Piece of information would have been helpful about 8 minutes
glad
ago.
we got it in there.
Yeah.
Glad we got it in there. So first time investors, 1-to-1 ratio. And it's a protection factor.
Mm-hmm.
Sure.
It's a risk factor.
Yeah.
For sure.
Now, what about for new investors without that 12-month experience? Are they still eligible for a DSCR loan without the 0.75 ratio?
They are. It's going to be a 1-to-1 ratio.
Yeah, and so a lot of people, and I'm always hesitant to try to do math like while the little red light on the camera is going.
Yeah.
But back to why would somebody want to do take advantage of the 0.75 ratio and have a rental payment that's lower than what what the mortgage payment's going to be, and I think it just is a matter of how you look at the numbers and how you look at the market and how you look at money works. Because at the end of the day, we call it negative cash flow, okay? And nobody likes that word because it's got the word negative in it. But it's not necessarily always negative. It's just a matter of how you're going to invest your money. So just hypothetically, let's say we were looking at a $400,000 property. And you're going to have to put 25% down. So now you're investing $100,000 into a $400,000 property. But let's say your negative cash flow is, $300 a month. Okay. We're expecting our market to appreciate over the next 12 months. I'm thinking about 5%. Some people are thinking it's going to be closer to 8 to 10. I'm not drinking that Kool-Aid yet, right? Mm-mm. So even like a 5%. So if my $400,000 property goes up by 5%, now I've made $20,000. but I've made $20,000 off my $100,000. Okay, so that's a pretty decent ROI. And then I would just subtract the $300 a month. Okay, it's $3,600 a month. I've still my ROI,
$3,600 a year.
year. My ROI is still pretty darn good, and I'm thinking that it's a better use and it's a better return at the end of the day than what the stock market's going to do for me, depending on how you do it. But it's not always a bad thing.
And you could potentially, if you had, depending on your tax situation, you could potentially write off that entire $3,600 loss, right?
Exactly. That's a great point.
And I feel like, we're trying to figure out appreciation, but I feel like these California fires are really going to drive our appreciation higher than what the expectations are. And we're going to find out here shortly too. I mean, we're talking it's 15,000 homes so far over there.
Something like this. I think I saw like 17,000 structures. I think is what I saw.
I think it's going to drive up rental rate before it drives up
I agree.
appreciation. I think
agree.
I think year one we're going to see quite an increase in rental rates, and then the ones that decide to stay here permanently, then they're going to convert from tenants over to homeowners. And then that's when we're going to start really seeing appreciation from that event.
Because also at the same token, I guess I'm not an expert on this, but if my house burns down, I still have a mortgage payment. So it's not as simple as right now that I just got all this money I'm going to come out here and buy.
Sure.
Yeah, I guess it depends on their insurance policy, because some of them will have mortgage protection on it.
And a lot of them don't even have insurance.
right, yeah.
So
I think you were asking, why would somebody buy something with a $3,400 payment when the rent schedule is $2,550? I think a lot of those individuals were coming out here in the mindset, I'm going to buy a second home, but they're really like, well, we're only going to be out here a couple of weeks a year, so let's Airbnb this guy, and so they were going to pay for a second home anyways, and they were going to have a lot higher monthly payment, and they're like, we're just going to do this as a short-term rental. We would have had the payment anyways. This DSCR option is wonderful.
who determines, and I think this is the big question, I know the answer, but I'll let you be the hero for the next 120 seconds, because we had a way we did things in the past, and I'm not going to get into details, but who determines market rent on a property? If I'm interested in 123 East Main Street, and we're talking about a DSCR loan, and we're talking about market rent that the lender's going to base the numbers off of, what's that process?
So when we order the appraisal, we order what's called a 1007 addendum, and that's an addendum to the appraisal that gives us the appraiser's opinion on what the value of the market rent is there. And so that's what we have to go off of. There's no way for us to bend it. Once it comes in, it's in. It's stuck to the property address. There's no way that we can remove that. This last one, we were expecting it to come in at $3,000, and it came in at $2,550. The good news is she was already planning on bringing this amount of money in. It was no big deal, especially with the new ratio.
And allowed it up to $3,250, or I think that's what
3,400.
3,400.
$2,550 allowed for up to $3,400.
All right, we don't expect you to be an expert on DSCR loans. That is why we have Justin. If you're thinking about a second home, you are thinking about investing in your next investment piece of real estate, highly recommend that you check out DSCR loans. I can tell you right now, not every lender knows what they are, has them available. And so I would highly recommend that you text the word loan to 623 AZ RECON. That's loan to 623 AZ RECON. And we'll introduce you to Justin's team and get the ball rolling for you.